Good morning, everybody. Welcome back to Morning Markets on Tuesday, the 28th of July. As a team today, we've been discussing a number of factors in markets, and I think the first thing that we just looked at was taking a step back and thinking about those factors that we've identified as being important drivers of market sentiment and then asset prices over the past number of months. And just to remind everyone what those are and what we've been thinking about, it's been the monetary support that is there from central banks, the fiscal support that's there from governments. It's thinking about and looking at the medical advances as they relate both to medicines for dealing with COVID-19, but also thinking about where we are with the development of a vaccine. It's looking at economic activity as economies are reopening and how that is progressing. And then finally, it's the overlay of geopolitics and the relationships between various different governments that are at play and how that's impacting sentiment and as a result asset prices. And looking through those different lenses allows us to think about just some of the things that are happening in the market. And yesterday I think is a good example of that we saw relatively subdued performance in the UK and in European equity markets. But then if we look at the US, with the US up 70 basis points, with the NASDAQ up 1.7%. And just taking a step back and thinking about those five lenses at which to look at the market, which of those were potentially helping sentiment yesterday? And if we look at it through that perspective, we could see that Moderna, one of the companies that is moving forward with its vaccine treatment, announced that it was going to move to a phase 3 trial, which in normal circumstances is the final large-scale trial. They will have 30,000 people involved in that. And then depending on the efficacy of the phase 3 trial, typically a pharmaceutical business would then move forward to getting the appropriate regulatory approvals to manufacture the vaccine. So I think that in and of itself is a real positive and something for us all to observe and to think about the advances that are being made in medical sciences to help us treat with COVID-19. So that's one thing that was there. And then we also had US durable goods orders yesterday for June, which continued to show ongoing improvement as businesses have started to invest. If we look at core capital goods orders, exclude the more volatile components of aircraft and defence spending, we could see that it improved 3.3% year on year. So ongoing improvement, but again will be impacted by the situation that we're seeing at the moment around COVID-19 and the closures in certain areas of the US economy to deal with that. The other aspect that we got more detail on yesterday was the proposed further fiscal support for the US economy. As we've touched on in the past, there are a number of the support packages that are in place today that will roll off as we get to the end of this month, and in particular the enhanced unemployment benefits that's being received, so the $600 additional payment that's been received on a weekly basis at this point in time. So the Republican Party set out their negotiating position yesterday. It's a further $1 trillion of support to the US economy. Does include changes to the unemployment, additional payments that are being made at this point in time, so reducing that from 600 to 200. But within it, there are many other areas of support, changes to that and legislative changes that they're seeking as part of getting this fiscal package through. I think there are, however, a number of challenges to think about here in getting this moved forward. One, there does appear to be more infighting within the Republican Party at this point in time in terms of the support that should be offered. We've got a Democratic Party who have their own proposals, and it's for a significantly larger fiscal support package, some $3.5 trillion that's being suggested. And then also we just have a calendar that is working against them. So they're going to have to do something, but they're going to have to do it in relatively short order. As I said, some expiring at the end of the month. We've got a scheduled break in the US political calendar. And then when they come back, we've got a shortened calendar as well, given the run into the elections in November. So a number of things to contend with in the US in terms of getting the fiscal package through over the coming weeks. Just other things that we touched on was just looking at the IFO, which is a business confidence survey in Germany, which showed considerable improvement both in the manufacturing side but also in the services side. And it was the services side in the IFO that was actually, I was a little bit surprised at the strength there. So that's very positive to see that coming through, as we know how Germany has navigated its way through COVID-19 so far. Then just the other thing to touch on today was just looking at the ongoing weakness in the US dollar, a theme that we've been touching on for a number of weeks now. We saw the dollar hit a 2-year low against that basket of currencies. And that also then has seen the gold price continue to move higher. It traded through yesterday its high that it hit in 2011 in dollar terms. And then it did sell off slightly, but trading at the end of the day at $1,930 or $32 an ounce. So continuing to move up. And again, looking at the press this morning, a lot of people suggesting that the 2,000 is the next level for the dollar. That's it for today. Please join us again tomorrow.